Okay, so let's start with the class. So it's going to take us an hour. I don't want to waste most of your time. So it's going to take us an hour. Then after that, there is going to be a questions and answers. So when you talk about Forex, what exactly are we talking of? Okay, what exactly are we talking of? So when you talk about Forex, Forex simply means what? Foreign exchange. I hope you guys have been hearing. Those who are experienced traders over here have heard about it. So when you talk about Forex or FX, it's simply what? Foreign exchange. So I usually call it what? Foreign currency exchange, or foreign what? Foreign currency trading. That's the meaning of forex. So when you talk about Forex simply means what? Exchanging your local currency for a foreign currency. Please take note. If you exchange your local currency for a foreign currency, I don't want to type it, it's going to take long. So if you exchange your local currency for a foreign currency, that is Forex. So those who have traveled outside the country can attest to that. So if you're about to travel outside this country, or if you're about to travel outside Ghana, or anywhere that you are going to what? When you get to the airport, or before you get to the airport, you have to what? Exchange your local currency. That's the Ghana cedis for what? The country that you are visiting, their currency. Because you can't go and spend Ghana cedis over there. It's not going to, even though it's possible, but it will happen. Like only few people are going to accept that. Okay, so in forex trading, if you exchange your local currency for a foreign currency, that is what? Forex. So if you're about to travel and when you're about to get back to, you have to exchange. Assume maybe you went to the United States and you are in Ghana. Before you get to the airport, you have to exchange your cedis to dollars. So before you get to United States, coming back to Ghana too, you have to exchange your dollars to what? Cedis, for you to be able to spend here. You get it? So that is Forex. So when you talk about Forex, that's the simple definition of what? Forex. So what's about Forex trading? When you talk about Forex trading, what does it mean? So when you talk about Forex trading, it simply means what? Exchanging of currency with the purpose or with the aim of what? Making profit. So you have to take note of the difference. So exchanging of your local currency with the purpose of what? Making profit. That is Forex trading. Okay, but most of the times Forex trading happen. Most of the as in making profits, with the aim of making profits, usually happens online. That's the speculation motive. Okay, predicting or what? Speculating on the exchange rate. Usually what retail traders does is what? You usually what? Speculate on the exchange rate. So you talk about the exchange rate. So I know most people have confused about. You guys have been here. Most people have been hearing about exchange rate. So you talk about the exchange rate too. So you usually what? Speculate or what? Bet on the exchange rate. Okay, so that is forex trading. So let's talk about the forex timing. So usually the forex market what moves around the world. It usually moves around the globe. Okay, so it starts from the Sydney session. That's what? The Australian session. So from the Australian session, it will move to the Singapore section. Okay, so as in these cities that I'm mentioning are the various what? Financial centers in the at the various financial centers in those continents. Okay, so when you talk about Australia, their financial market center is the Sydney what? The Sydney market, or the Sydney market. So when you get to Singapore too, their financial markets with that, I don't know whether it's Singapore. I don't know of that. But when you get to Tokyo too, when you get to what do you call it? With the Asian session, let me put it this way. So with the Asian session, we have various financial markets. We have the Australian session, that's the Sydney session. We move to the Singapore session. We move to what? The Tokyo, then the Hong Kong session. Okay, so those four sessions that I've mentioned are called what? The Asian sessions. So after that, it will move to what? The London session. Okay, that's the European session. With the European session, we have the London session and the Frankfurt session. So when you talk about the Frankfurt is the Germany session. Okay, that's the Germany. And when you talk about the London session too, that's the United Kingdom. Okay, so I've talked about the Asian session, I've talked about the London session. Then it will move towards the New York session. Then the market will start again. Okay, so the forex market never sleeps. It moves around the world, and it's what? It is a 24 hours market and 5 days within a week. It's only closed during the weekends. So take note of that. It is what? 24 hours market and what? 5 days a week. Okay, 24 hours. That means what? If you are working, you can still take advantage of. And I know most people who are working in Ghana, with the work in Ghana, we don't work. They don't usually give shifts, or most of the works are not in shift basis. So most of the works what takes most of your times within the day. So you don't usually have time to even trade. So if you want to experience how the market moves, you can take advantage of the Asian session. And with the Asian session too, it usually happens during the midnight. So if you are really serious about this craft, you can take advantage, or you can be watching the movements of the candles during the midnight session. That's around 11 p.m. From 11 p.m. 11 p.m. Then it will move to 12 a.m. 1:30. Then those those times what have more volume in the market. Okay, so take note of that. So you've talked about what is forex, you talk about the forex trading. So let me chip in this thing. So with the forex market too, the forex market is a decentralized market. So when you talk about decentralization, that means what? Everyone can trade the market. Okay, it's you don't have a centralized, or you don't have a specific location that the forex market can be traded. You can trade the forex anywhere. Okay, so far as you have a network, you have a device, a smart device, you can what, and you have a broker account, you can what, go into the market without any restriction. So as I said, you have to have a broker account, you have to have an internet and your device, either laptop or what, a computer, and you can participate in the forex market easily. Okay, so when you talk about decentralization, that means what? Any parts of the world that you are, you can what, participate in the forex market. And the forex market is what? An over-the-counter market. So when you talk about the over-the-counter market, that means what? You don't need any authorization. Okay, so it's usually a contract between two parties. So we, for instance, we are retail traders. Okay, we speculate on the exchange rate, we bet on the exchange rate. So what we do is what? We form, or we go into a contract with our broker. Okay, so I've talked about the broker. When you talk about brokers too, brokers are the people that will help you to go into the market, because in the forex market, or in the forex exchange market, in the forex trading market, you can't what? You can't use your $100 to go as a standalone. By what? You will not get anyone to transact with. So you talk about the currency pairs and those things too. So usually you have to what? Have someone that's what you can go into an agreement, because in the forex market, as you are buying one, someone too needs to what? Sell one. So have you asked yourself, especially I'm asking a question to those who are already in those who have traded in the market for long. Usually when you say I'm buying this currency pair, you buy one and sell one. Have you asked yourself who is taking the other parts of the trade? Because when you buy, someone too needs to what? Sell, so that if you win, the person will pay you, and if you lose, you are going to pay the person. So usually you have to have a broker. So you usually have a contract with the brokers. So the brokers are the ones that you form a contract or go into an agreement with. So if I place a buy and the trade goes in my direction, my brokers are going to pay me. And if I place a sell, or if I place a buy and the trade goes against me, I'm going to pay my brokers. So when you dive deep into forex, into the retail space, we have different types of brokers. We have AB brokers, we have B book brokers. Okay, so we have some brokers that when they will take your orders straight into the market, and we have some brokers too that they don't take your trades into the market. It's something like simulation. Okay, so it's like pay Peter to pay Paul. Okay, so they know most of the forex traders most people in the forex space are not good, so they don't usually send your orders into the forex market. So if you win, they will use some people's money to pay. So you talk about that one is different, so it's deep. I don't want to talk about that. So you've talked about the over the counter market. Forex is an over the counter market. That means what? It's a contract between two parties. So if I'm having a dollar and someone is having a series, we can what? Just have a contract, a mutual agreement. You bring your dollar, I exchange your series. Maybe you want to buy something with dollar and I'm having a dollar, I will just exchange it with you. So that's an over the counter. I don't need to go to any maybe security exchange for them to give me a permission for me to exchange currencies with you. Okay, so when you talk about over the counter, meaning what? It's you don't need any authorization for you to exchange for you to do an exchange, as in foreign exchange. Okay, so you talk about the decentralization. That means what? The forex market can happen anywhere that you are. Okay, we don't have any centralized or specific location that it usually happens. So that's about what the introduction of forex. And with the forex market too, forex market is the most liquid financial market in the world. So when you talk about the financial market, so we have a lot of financial markets in the world. We have what do you call it? We have the cryptocurrency. Cryptocurrency is a financial market. The stock market too is a financial market. The bond market is a financial market. Okay, we have commodity market. They are all financial market. But when you talk about the most liquid financial market in the world, that's the forex market. So what does it mean by liquid? So when you talk about liquid or liquidity, that means what? We have more buying and selling, as in within a specific moment or within a specific time. Those people, we have more people buying a currency and selling a currency more than any of the financial markets. Okay, so with those financial markets we have specific things that they usually transact. But with the forex market, currencies are what is traded in the forex market. Okay, for currencies are what is traded in the forex market. So when you talk about liquid means what? We have more people buying and selling currencies. That is why it is the most liquid, as in the most liquid financial market, or it has the most volume. Okay, within a day, people buying and selling currencies are more than, or they are more than those financial markets. Okay, so in the cryptocurrencies too, we know what is being transacted over there. So we have the digital coins or the digital currency. That is what is transacted over there. But when you talk about the forex market, what is being transacted, what is the instrument that is being traded over there is what? Fiat currencies. Currencies are what traded in the forex market. So that is why it is the most liquid. So anytime you hear, or in case maybe if you are scrolling through social media and you see some people, forex traders, talking about the most liquid market, as in there was liquidity in the market, there was volume in the market, they are simply saying what? I know even experienced people have been saying volume and liquidity, but they don't even understand what exactly they are talking about. So when you talk about liquidity or volume, that means what? Within that specific time, we have more people buying and selling those currency pair. Okay, so take note. Or within that specific time, when there is volume within that market, so that means more people are buying and selling the currency pair. Okay, so it is the most liquid financial market in the world. So you've talked about the introduction of forex. You talk about what is forex. You talk about what is being what do you call it, the over-the-counter market. You talk about the decentralization. We talk about the as in the most liquid or the most as in the most liquid financial market in the world is the forex market. So in the forex market, within a day, the transaction, as in people buying and selling, is around $6.6 trillion within a day. Okay, so it is the most liquid market in the world. Okay, so let's talk about in the forex market. What is traded in the forex market? Please, can you hear me? Are you guys there? I'm just ranting. If you are there, let me hear your voice.
Yeah, we are here.
Are you people there? Okay.
Yeah, we are here.
Okay. So let's talk about what is traded in the forex market.
We are here.
What is traded in the forex market? So when you talk about what is traded in the forex market is simply what? Currencies. Okay, currencies is what is traded in the forex market. So I know some people are participating in this forex market, or I know some people are participating in the financial market, and they are trading instruments like, or they are trading an asset like gold. They are trading commodities, and they usually say, I'm a forex trader, or maybe they are trading in index, and they are saying they are forex traders. So if you trade index, if you trade commodities, if you trade anything aside currencies, you are not a forex trader. So when you talk about forex, as I've explained, you are exchanging a currency for a currency for a different currency. Okay, so what is traded in the forex market is currencies. So if you trade gold, you are not a forex trader. So take note, you are a commodity trader. If you trade crypto, you are not a forex trader. So you have to know the difference between this. you have to know the difference between what I'm talking about, the forex market, the commodity market. It is a different thing altogether. Even though it is the same ideology, is the same thing that you use to analyze. By some of the things, it's for you to be, for someone to term you as a professional, or for someone to classify you as a professional. If you tell the person you trade, if the person asks you what do you trade, I'm trade gold, so I'm a forex trader, the person is not going to assume you to be a professional, because you are wrong. If you trade gold, you are not a forex trader. So forex is simply what? Trading of currencies. Okay, forex is simply trading of currency. So we have many currencies that are being traded in the forex market. We have many currencies, but since there are many, they have what? They have categorized them into what? They have categorized them into groups. So let's talk about currencies. So some of the currencies that are being traded in the forex market, we have as in the United States dollar, we have the Japanese yen. Okay, we have what do you call it? The euro. That's the eurozone, the currency that they spend. We have the Switzerland francs, that's the CHF. So mostly we have many currencies that is being spent in this world. Okay, they have many currencies that are being spent in this world. But in the forex, when you go to your forex broker platform, or even when you go to the bank or any forex bureau, most of the time the currencies, the full name of the currencies are not written over there. They are written, the currency are being written in abbreviation. So currencies are being written in abbreviation. So they are in 3 letters. So example, like when you take example of a currency pair, example of a currency, sorry, we have not got into the example of a currency pair. So example of a currency, so currencies. So we have a USD. Okay, so as I explained, currencies are usually what? Currencies are usually what? Quoted them in abbreviations. Okay, so the first 2 letters, is the name of the country, and the last letter is the name of the currency. Please take note. The first 2 letters. So currencies are usually what? Written in 3 letters. Currencies are usually written in 3 letters in the forex market, or in the forex or in the currency market, currency trading market. Currencies are the first 2 letters is what? The name of the country. So USD. So this one is the name of the country. Okay, this one is the name of the country. The first 2 letters is the name of the country, and the last letter is the name of the currency. Okay, the last letter is the name of the currency. So the name of the country, and the last letter is the name of what? The currency. Please take note. So according to how this one has been written, it was not established by me. It was established by an organization or an institution. Okay, so according to International Standard Organization, they are the people who, this organization or institution are the one those brought this establishment. So the way countries are currency pairs are being written was established by an organization. Okay, so I have no idea about how they came about this one. So let's move on to currency pairs. Okay, let's talk about the exchange rate. So you've talked about, okay, so let's talk about the currency, as in the types of currencies. So we have like 3 types of currency. Currencies are usually they've categorized them into 3 types. So we have the major currencies, we have the crossing, and the exotic currency. So those are the currency pairs rather. Okay, by the major currencies are the United States dollar, the GBP, that's the Great Britain pounds, we have the JPY, the Japanese yen, we have the CHFs, we have the the euro. Okay, so the major currencies are 8. So why are they majors? They are majors because they are the most traded currencies in the world. And I think you see, every currency is affiliated or influenced by a country. And every currency belongs to a country too. Please take note. Every currency belongs to a country, or it's being affiliated to a country. So whatever is going to happen in the economy, or the weakness or the strength of a country, is going to be affected by the currency of the country. Okay, so every currency belongs to a country. So the reason why we have these majors, as in the United States dollar, the Japanese, Great Britain pound, the Japanese yen, the Switzerland franc, the eurozone currency, that's the euro, and yeah, those currencies. The reason why they are the major currencies is what? They are the most traded currencies in the world. Please take note. They are the most traded currency. So most of the time, so if you want to buy some, maybe if you want to buy an oil, if you want to buy oil in maybe Russia or something, you have to, or maybe Saudi Arabia, you have to pay it with dollars. Okay, even those who do importation, those who buy things from China and those things, usually if you're buying from Alibaba, you have to pay it in what? Dollars. So the reason why those currencies are strong is because what? They are the most traded. So in case of maybe you are doing transaction and other stuff, they are the currency that people usually use to transact. They are the accepted currencies in the world. Okay, so that's why they are the major currencies. Okay, so let's talk about exchange rates. So we talk about the major currencies. So we when you go to the as in the currency pairs, so we talk about the major currencies, the crossing currencies, and the what exotic currency pairs. So let's talk about the exchange rate. So when you hear about exchange rates, I know currently the exchange rate of Ghana, as in the exchange rate is currently what? Is very high. So what do you understand by exchange rate? So when you talk about exchange rate simply means what? Comparing the prices or the value of two currencies. Comparing the prices of two currencies. So let's say USD Ghana cedis. Okay, let's say USD Ghana cedis. This is an exchange rate simply because what we are trying to what they've quoted two different country currency together. So this is an exchange rate. So when you talk about exchange rate, comparing the price of two currencies, that is exchange rate. Am I making sense? Is there any question? As a teacher, you have to ask your students if they are having questions. You can't be ranting all day. Is there any question so far?
No, no, sir.
There's no question.
No, sir.
Okay, but I hope I'm making sense.
Yes, sir. We are getting it.
Okay, so as I
What?
explained. Hello, is someone talking?
You're
Okay, so
making 100% sense.
okay, so when you talk about exchange rate simply means what? Comparing the prices of two currencies. Okay, so this is a country currency. So the dollar is a country currency. That's the United States currency. The Ghana cedis is what? The currency for Ghana. Okay, so if you quote them together, this is an exchange rate. Okay, this is an exchange rate. This is an exchange rate. So it simply means what? For how much of a currency will you need to get this currency? Or if you are having this one, how much are you going to get of this one? So when you get to the base and the quote currency, you will talk about it. So in the forex market, currencies are usually quoted in pairs. So you can't trade currency as a standalone. Currencies are usually quoted in pairs as the exchange rate. Okay, they are usually quoted in pairs. So you buy one and you sell one. The reason why they are quoted in pairs is what? If you are buying one, you are going to sell one. Okay, if you are selling one, you are going to buy one. You can't say you are buying USD. It's not possible in the forex market. So anytime you are buying a currency pair, you are buying one and selling one simultaneously at the same time. Okay, so let's take the airport example that I gave, or a scenario that I gave. Or let me take the importation example that I gave. So supposing maybe you are purchasing something from China. If you are purchasing something from China and you're having the Ghana cedis, you are going to what? You are going to sell your Ghana cedis to buy what? The Chinese yuan. Okay, you are going to sell the Ghana cedis to purchase what? The Chinese currency. for you to be able to buy the thing that you are buying from China. I hope you get it. So that's why I'm saying currencies are not being traded alone. We don't trade currencies alone in the forex market. They are being traded in pairs. So currencies are quoted in pairs. So please take note. Currencies are quoted in pairs. So as you are buying one, you are selling one at the same time. Okay, as you are buying one, you are selling one. So currency pairs are grouped in three types. Okay, so as I said, we have the major currency pairs, we have the crossing pairs, and you have what, the exotic pairs. So when you talk about the major currency pairs, as in comparing or as in quoting two of the major currencies together. So if you quote USD JPY, it's what, a major currency pair. If you quote the JPY as in USD CAD, the Canadian dollar, it's what, a major currency. Okay, it's a major currency pair. So if you want to understand more of this, if you want to know more of the currency pairs as in the major currency pairs, if you go to the right tab, I know all of you join the free group that happened in the WhatsApp space. So I know most of you join those sections, so you understand them. So when you talk about you talked about the major currency pair. So let's move to the crossing. So the crossing simply means what? Pairing the major currency pairs together, but it excludes the United States dollar. Please take note. If you pair the major currency pairs together, but if you exclude the United States, that is a cross currency pair. Okay, so let's say if you pair something like GBP JPY, this is what? Cross currency pair. So let me give an example. So currencies, when you go to your broker's platform, so let's take what do you call it? Let's take TradingView for instance. When you go to TradingView, currencies are not written in full. Let's say United States dollar, they are written in abbreviation as you see over here. So let me go to my watch list. Where am I even going? Okay, let me go here. So you see how they are being written. So these are how they are being written on your various platforms. So when you go to the MetaTrader 5, you will see them. They are being written in what? Abbreviation. Please, someone who is making noise over there. Is making noise. Okay, so they are being quoted in what? Abbreviation. Please take note. They are being quoted in abbreviation. So crossing means what? Comparing the majors, excluding the United States dollar. Okay, comparing the majors, excluding the United States dollar. And when you talk about the exotic pairs, so exotic pairs simply means what? Comparing or what? Quoting the majors with an emerging currency. When you talk about an emerging currency simply means what? The developing country currency. So the Ghana is a developing country currency. So comparing the Ghana cedi to the United States dollar is what? Exotic currency pair. Okay, it's an exotic currency pair. So if we say, we've gotten to where most people get confused. So if you usually say, I'm buying this exchange rate, I'm buying USD Ghana cedi, I'm buying GBP JPY. Which currency are you exactly buying? Okay, which currency are you exactly buying? That's where most people get it confused. So we are going to talk about the base and the quote currency. So when you talk about the base and the quote currency, it simply means what? The first currency is the base currency. The first currency is the base currency. Okay, the first currency is the base currency in the forex market, and the second currency is the quote currency or the counter currency in the forex space. Okay, so with the base currency is always the reference element. Okay, and it always stands as one. So if I say I'm buying, if I give you a signal and I tell you buy GBP JPY, I'm simply telling you what? You are buying the base currency and selling what? The quote currency. Please take note. So that's the meaning of what? the base currency and the quote currency. So the base currency simply means what? The base currency is the reference element. Anytime that you see currencies being quoted in pairs, the base currency is the reference element, and the second currency is the quote currency. That's the counter currency. Okay, so always if you are referring to the base currency, if you want to know which currency is being the reference element, always what? The first currency is the base currency, and it always stands as one. So let's go back to the exchange rate. So I said this one is an exchange rate. So it simply means what? If you have one of the pounds, okay, let's say 1 pound, it simply means 1 pound is equal to maybe 1.82. So with this one, 1.82 JPY, okay, or the Japanese yen. Okay, so this is the exchange rate. When you see the exchange rate, so currently the exchange rate for the United States and the Ghana cedi is what? 14. So if they say the exchange rate is like 14 or 15, what are they trying to tell you? So they are simply saying what? If you have $1, you'll be able to get what? If you have $1, you have to what? If you have $1, you get yourself 15 cedis. That's the meaning of what? Exchange rate. If you have $1, you are going to get yourself 15 cedis. Or if you have 15 cedis in your account and you want to exchange it for $1, you are going to get only $1. So usually if you hear the exchange rate is what? The exchange rate has increased, or the exchange rate is high, they are simply telling you what? You need more of the quote currency for you to be able to get what? One base currency. Please take note. When they say the exchange rate is high, you need what? More of the quote currency or the counter currency for you to be able to get a base currency. That's why Ghanaians are complaining, because what? They need to get more cedis for them to get only $1. So that's the meaning of exchange rate. So that's how you'll be able to read exchange rate. So let's say if I tell you buy GBP JPY, I'm simply telling you what? Buy what? The base currency and sell the quote currency. As I explained earlier, currencies are what? Being quoted in pairs, in the sense that if you are buying one currency at the same time or simultaneously, you are selling the other currency too. Okay, you are selling the other currency too. So if I say buy GBP JPY, I'm simply telling you what? Buy the base currency and sell what? The quote currency. Okay, so take note. So let's try and read this exchange rate. So if I say buy GBP JPY, what I'm trying to say again is what? How many of the quote currency will you be do you have to have, or do you have to get for you to be able to what? Get a 1 pound or the base currency? Okay, how many units of currencies do you have to have in your pocket for you to be able to get 1 unit of the base currency? That's the simple meaning of what? The exchange rate. So that's how you are going to read exchange rate. Okay, that's how you are going to read exchange rate. So if you have one base currency, or if you have 1 pound, you'll be able to get yourself maybe 1.28 or 1.47 yen. That's what it simply means. Okay, that's what it simply means. So if you have 1.47 yen, I'm going to what? If I want to exchange it for pound, I'll be able to get 1 pound. So if I give you a signal and I say buy GBP JPY, I'm simply telling you buy the pound and what? Sell the JPY. So how is it going to be represented in the chart? So simply, as I said, the base currency is always the reference element. So if I say buy, I'm referring to the base currency. So on the chart too, you see on the chart, they are being quoted in what? Pairs over here. The Britain pound and the USD dollars. Okay, so you can see green colors, you can see red color. Okay, so the red refers to what? The bullish candle. Okay, we usually refer them as a bullish candle. So we have some terminologies. So some of the terminologies include, when you say buy, it simply means what? Bullish. Okay, it simply means bullish, or simply means what? Long. Okay, and when I say sell, it simply means what? Bearish. Okay, it simply means bearish or what? Short. Okay, so if I say buy GBP JPY, I'm simply telling you what? Buy the base currency and sell the quote currency. So the first currency, the base currency as the reference element is what you are going to see over here. So you are going to see what? So my green color represents the bullish candles, and my red candles represent the bearish candle or the sell or the short. Okay, so if I say buy, I'm going to have to see what? Bullish candles. If I say sell, I have to see what I'm expecting is what? I have to see what? I have to see the red candles. Okay, so take note. The red represent the bullish candles, and the green represents what? The bullish candle. The red represents the bearish candle. The green represents the bullish candle. The reason is what? As I explained, always the base currency is the reference element. So if I say buy, I'm referring to what? GBP JPY. So I want to see what? Bullish candles. Okay, I want to see bullish candle. We are not going to use the quote currency. I said when with the exchange rates, anytime you are referring to buy or sell, you are referring it to the what? The base currency. So take note. So on the candles, to what you have to expect is what? Only the base currency. Only the base currency candles is what you are going to expect. Okay, so currently, if I assuming I'm giving you a signal on, maybe if I'm giving you a signal on USD card, okay, if I'm giving you a signal on USD card and I say sell USD card, I'm expecting what? To see red candles. Okay, I'm expecting to see red candle, and I'm referring it to what? The base currency, that's the dollar. Okay, the United States dollar. Okay, that's what I'm expecting. So if I say buy, I'm going to expect the dollar. I'm going to expect the dollar to what? Move up. So I'm expecting a what? A bullish candle or a green candles. Okay, so these candles are what? These candles are not the standard candles that you have to use, but you have to use a candle that it will be easy for you to remember them. Okay, some people can use red and white, other people too can use blue based on how they understand them. Okay, so these colors that I've used to represent the bullish and the bearish candles are not the standardized colors in the industry, okay, or in the financial market. You can use any colors to represent them based on your understanding, based on how you understand. You'll be able to what? Interpret the candles, okay, to someone, or interpret it to yourself without you getting confused. So that's the meaning of what? The bullish candle and the bullish and the bearish candle. Please, at this point, any question? Any question at this point?
No, sir.
Any question at this point? And am I making sense?
Yes, sir. You are making
Is
sense.
okay, okay, okay. So when we say buy, okay, so on the chart, what you are going to see is what? On the chart, what you are going to see. So let's move to the bid and the ask price. I've talked about the base and the quote currencies. Let's move to I wanted to let me search for base and the quote currency on how they are being presented on the MetaTrader 5 base and the quote currency, so that I'll be able to interpret it well to you. My internet is slow. Okay. Hello, can you hear me?
Yes.
Okay. So on the MetaTrader 5, I want to give you on the MetaTrader 5, MT5 on phone. Okay. Okay, so when you move to on your MetaTrader 5, where you'll be able to see the currency pair, on your MetaTrader 5, you have to click on the quote. That's where you'll be able to see the currency pairs. My internet is so as I should have downloaded. Okay, let me see whether I have some days in the quiz career. Okay, I have some over here. Okay, can you see my screen? Can you see my screen?
Yes.
Okay, so here is the base. This is the instrument. Okay, so as I said, usually on your broker platform, they have quoted them in abbreviations. So this is the Euro USD. That means what? The Euro USD is in abbreviation now. Okay, so the Euro USD in abbreviation. So if I tell you to buy Euro USD, what I'm simply telling you is what? You are expecting the euros to appreciate in value, and you are expecting the USD to depreciate in value. And as I explained earlier, every currency is being influenced by what is happening in an economy. Okay, what is happening in the economy. So if currency pair is selling, that means what? The base currency country is performing very bad, or the base currency country, like things are not going on right in that country. Okay, so that currency pair is going to depreciate in value. And if I tell you to buy Euro USD, I'm simply telling you what the Euro economy is going to do well. Eurozone is going to do well. Maybe employment is going to go up, production and productivity, all those things, they are going to increase interest rates, and those things what affect a country currency to what appreciate in value. So that's what I'm simply telling you. So that means what? If I say the euro should appreciate, that means what? I'm expecting the dollar to depreciate automatically. As I explained, currencies are traded in pair. So if you are buying one, you are going to sell one, the opposite direction. Okay, so take note of that. So we talked about them. So let's move to the bid and the ask price. So let's move to the bid and the ask price. So when you talk about the bid and the ask price, you usually see some numbers over there. Okay, the numbers you see aside or being written attached to the exchange rate, the currency pairs, okay, is the bid and the ask price. So we have an example over here. So this one, the first one is the bid price, and the second one is what? The ask price. So these prices you see over here is the prices for your broker or the bank or anyone that you are exchanging from. Okay, that is their prices. So when you go to the bank, so now if you go to the bank, you can notice those things. If you watch the foreign exchange notice board, you will see this how they will be quoting them. Okay, this is how they will be quoting them. So the first currency, we call it the bid price. The second currency, we call it what? The ask price. So when you talk about the bid price, always the ask price is greater than the what, or is bigger than the bid price, in the sense that the ask price is the price that your brokers are going to what? Sell to you. Okay, by the buying, this is their buying price. Okay, so in case if you want to buy the base currency, if I'm buying Euro USD, that means I'm buying euros from the brokers, and what? I'm going to exchange it with my what? Dollar. So the brokers are going to what? Sell euro to me at this point. So you can see the numbers, one is bigger than the other, or one is greater than the other. You see 1.12042. This is what? 1.2048. So the second currency, the second figure is bigger than what? The first one. So this is their selling price, this is the buying price. So take note, the first one is the buying price for the broker, the second one is the selling price for the broker. So if you are buying the base currency, your brokers are going to give it to you at what? If you are buying, they are going to give it to you at the ask price. Okay, they are going to give it to you at the ask price. And if you are selling Euro USD, your brokers are going to give it to you at the buying price. This is their buying price. If you are selling, that means what? You are selling what? Euros to your brokers. Okay, you are selling euros to your brokers. So let's take let's make an example. So assuming maybe if you want to currencies with the Ghana cedis, this is how they are going to be quoted. This is how it's going to be quoted. We are going to quote it to like what? USD Ghana cedis. So USD is because the USD is what? Is the most traded currency. So it's going to be the first currency to be mentioned. So USD Ghana cedis, okay, USD Ghana cedis. So if I go to the bank and I want to buy USD Ghana cedis, the bank is going to give it to me because I want to buy the dollar, they are going to give it to me at this price, the second one. So if you go to the bank and it is being written like this, you don't have to get confused since you have known it now. You don't have to get confused. They are going to give it to you at this price, the ask price, the greater price or the bigger price, okay? But if you are selling USD Ghana cedis, that means you are selling dollars to the bank, and you are going to buy or take in returns of the Ghana cedis. So the bank is going to buy your dollars at this price, okay? They are going to buy it at the price. So the difference between this and this, we call it the spread. That is going to be the commission for the bank, or the charges that the banks are going to get, okay, or the bank profits. I hope you get it. So in the Forex space, the difference between this and this is the commission, or is the charges your brokers are charging you for the position or the trade that you have taken. So let's say I've placed a position or a trade on buy Euro USD. I'm simply saying I place a buy Euro USD, a buy on Euro USD. The difference between this and this is going to be the charges of this position that I've taken or executed. Okay, so this is the charges for this is the profit for the brokers. So it is going to be in pips. So they are going to multiply the pips by your lot size. Maybe I place a standard lot, so that means 1 pip is going to be $10. So they multiply 10 by, maybe the difference is 42, 40. So the difference is, I think, 6 rather. So you multiply 6 pips times $10, okay, that will give you 60. So the $60 is going to be the profit for the brokers. That's the charge they are going to charge you for the standard lot you've placed on you've placed on this trade. Okay, you've placed on this trade. So at this point, any questions? So I've exhausted my time. Any question at this point? So you talk about what is Forex, you talk about the introduction of Forex, what is traded in the Forex market. We notice some of the things that you trade that is not Forex, and the things that being traded in the Forex market. You talk about the bid and the ask price. You talk about the in the Forex market, currencies are traded in pairs. You talked about the spread, as in the charges for the brokers. You talked a lot about you've explained a lot of things over here. So we are going to end the meeting over here. Any question at this point?
Please, I would like to make some clarification here on the bid and the ask.
Okay.
So the currency pairs. Let me also give an example. USD and then Ghana cedis. So you go to your broker and then you want to buy USD. They usually sell it to you at a higher price, right?
Yeah.
Yes. And then if you want to sell it, that means the price will definitely
You
go
are
down.
Yeah, if you are selling it, not the price, the charges. Sorry.
Yes.
Yeah,
Yes.
the price. Now, yeah, the price will go down. So if you are selling Euro USD, that means you are selling the base currency. So if you sell the
Yes.
base currency to them, they are going to buy it at what? They are
A
going
higher
to
price.
buy it a lower price. You are selling it to them, so they are going to buy it at lower. This is their buying price and this is their selling price. So if you buy Euro USD, this is the price they are going to give it to you. Okay, so it
Okay.
will be low. You get it? It is going to be low. And if you are buying from them, if you are buying Euro USD, they are going to give it to you at a high price. So you see, maybe
Okay.
if you execute, this is how it's going to be. So supposing this is the current market price.
Okay.
This is the current market price. This is the current market price. This is the current market price. Okay. And I'm buying, let's say, buy Euro USD. So if I'm buying, they are going to give it to me at the ask price. Okay, they are going to give it to me at the ask price. So this is the current price. So you see, if you execute it at this point, the price would your order will be triggered at a higher price.
Yes.
You get it? Your order will be
Okay.
triggered at a higher price, not the current this thing, because they will take the spread, the commission that they will charge for you, the position that you are executing. So the price will go up. The same as if you are selling, instead of because you are selling low, okay, you were supposed to be triggered over here, but now the price will go lower. Okay,
Go
the price
lower.
because of the difference between the bid and the ask price. Okay, so that's the meaning.
Okay. Thank you.
You're welcome. Any question again?
Yeah, hello.
Hello, I'm listening.
Yeah, thank you very much for this time of teaching. We are so grateful for helping us. I want to know how can you help us for the signals, please?
So with the
S-
signal, with one thing I will say to you is, you see, people have been DMing me, showing me some robots and other stuffs. I will advise you those things. I've been in this industry for long. Those things will work for some time and later it will crumble. Your money will go away. It is not sustainable. And if it is easy, no one will waste his time learning how to trade. If those robots and those things work, no one is going to waste his time to learn how to analyze the market. I'll just buy the robots and it will be what working for me. So it will work for some time and later it will crumble. So the thing is with the robots, how they've programmed the robot is, so let's say the way I trade, and I would tell, maybe I'll go and see a programmer to what to automate it. You get it? Because sometimes if I'm taking a trade, I really think deep before I'll execute. And even though the patterns are the same, but when it comes to execution, you always think, no matter the number of years you've traded in the market, you always think, like, not you are doubting your system, but sometimes like it seems like the market hasn't closed yet, and that's why fear of missing out and those things happens in the market. So assuming I've automated it, I've programmed the thing to be fixed, so the thing to work this specific way. Okay, it doesn't think the way I've programmed, so you will lose a lot in the market. Okay, so it is better for you to learn how to trade yourself. If you are losing money, even though it's a lot of work, but it is better, because you relying on someone on your source of income. One thing I don't like in my life is relying on someone to tell me or to feed me. That's a bad decision you would take. So always try to do things yourself, even if it is going to take you. So let me give you a story. When I started trading, I was in a group. My mentor used to drop signals, but I wasn't taking those signals. I would like to analyze the market and like see it going in my favor, other than taking my mentor's trade, because I wasn't in haste to make money and those things. The reason why most people give up in this industry is what they come with the mindset of making money fast. That's very bad idea. So it is better for you to seek education other than seeking signal. So with a signal, with my group, I usually I take the trade that I'll take on my live account. I usually share it in the group. So it's in the form of signal. I give them like the trade that I share. If I'm buying, I tell them, oh, maybe I'm expecting a buy on GBP, USD or gold or something. So I tell them, I'm taking, if I'm executing a trade, I tell them, okay, so it's in the form of signal. But my focus for the people in my group is what, for them to be able to learn how to analyze the market yourself, because this is a profession and it comes with a lot of advantages. If you have the skill set, you can teach people how to trade and you can make money from there. You can, like, there are a lot of advantages that comes with. Okay, the reason why you've tuned in to listening to me is because what, you've experienced, as in you've witnessed how I explain the market to you. That's why you were in haste to listen to me, because you knew I understand what I'm doing. So it's better for you to get a skill set. So that's my advice. But with my group, I share my trade ideas with them. Thank you. Hello. Hello.
Yeah, thank you very much.
You're welcome.
Mm.
Any question again? Any question again? Any question again? So like I plan of doing this thing more often, but time hasn't been permitting me to be doing this thing. Like I'm always busy having classes with people and other stuff. So, but I will try. Today I was free to that's why I decided to do it. So anytime that I'm free, I'll try and come around to share some of the knowledge. So if you want to have a consistent knowledge from me, the only best thing is for you to join my group. And with one of the things that like if there was an opportunity, I would like someone to talk. I'm really committed in the group. Okay, every evening. Today I'm exhausted, so I'm not sure, and some of them are here. Every evening I meet them. Okay, you just pay 300 cedis. Every evening I meet them. Okay, I meet them. We discuss what we are about to expect from the as in the market. Okay, what you'll be expecting the following day. Every Sundays too, we do a session as a webinar. That's any introduction to a new topic. We do questions and answer sections. I'm always available to answer their questions and those stuff. So it will be better for you to be join the mentorship than being stingy, trying to do things alone. You will lose money later. That you will before you realize you've lost money than even trying to join the mentorship. Okay, so you have to join someone who can give you knowledge and other stuff. There are a lot of things that you might not know in the market, and someone needs to tell you about it, about even the news events. It is not advisable to trade news events and those things. These things, or if you're a beginner, it's very hard for you to know. And you have a community, you can talk to people, you can form a group with some people. Always you guys will be looking at the market the same. So anything that you do in this world, you have to have someone that you want, the person who will coach you, and you have to try and join same like-minded people. Okay, the people who are having the same goal as you, so that you get motivated, you get inspired by some of the achievements of some people. Okay, so it's better for you to pay for the mentorship of someone other than trying to figure it out yourself. It will take you long and you lose money on the line. All right. So any question again? Any question? So our next meeting, I'll try and talk about the lot size. I'll talk about the pips and those stuff. So for now, if you join this webinar to the end, if someone say buy, know what you are expecting from the market. If someone says sell, you have to know what you are expecting from the market. You don't have to get confused. And especially if you go to the bank and you're about to have any foreign exchange transaction, the things that the currency pairs or how they have quoted their currency, you have to easily understand, because what your Forex tutor have taught you how to interpret the exchange rate, how to read the exchange rate. Okay, so it should be something simple for you. So the videos too, I'll upload them on YouTube. So if you have time to, you can go over and watch them again. Any question? Any questions so far? Okay, so if there's no question, let's call it a day, a night rather. Thank you all for tuning in. Bye-bye.
Okay, thank you, sir. We are grateful.
Thank you, sir.
Okay, you're welcome.